Okay, everybody. I just wanted to get on and talk about the concept of performance of your TSP account in perspective with respect to long-term, medium-term, and short-term performance. So understanding how to evaluate the performance of your TSP account can be more tricky than it seems. Performance is an ever-changing relative number. To make a complex topic simple, the financial services industry publishes the performance snapshots that we all understand. The year to date, 1 year, 3 year, 10-year rate of return. Investors use these performance snapshots to evaluate one fund against another or one method of TSP management against another. The reality is that performance is not a series of subjective snapshots. The performance of your TSP account changes at the close of each trading day. More importantly is how individual investors utilize performance data along the course of their career and into retirement. Long-term performance of a fund may be very important, maybe a very important metric to a 23-year-old new government employee, but to a 60-year-old, short-term performance metrics become much more important. So if we begin with a comparison chart of all four TSP funds, beginning back in 2003, when the TSP, as we know it today, actually began. Okay, around this time, the TSP moved from an allotment system to a net asset value system where each fund was valued at the end of every trading day. So 2003, as many of you will recall, was the bottom of the tech bubble crash. From that point through the end of October 2023, okay, so 20 years, the S fund has outperformed all the other funds, right? Here's the S fund in blue, with a positive 434.59% gain since the inception here, our inception point here at 2023. So on the face of it, you might conclude that a buy and hold strategy of 100% S fund is the best option for TSP investors. Okay. However, to get the oversized gains that we see in the S fund, you have to accept oversized volatility. The S fund was up to 680%, right, at its high in 2021. So to get down to 434% is a 35% decline in relative performance over the past 2 years. Okay, so you have to take the highs and the lows over this time frame. If we move our starting point to the top of the market in 2007, so we pushed it forward a couple years. Now we're at the top of the market in 2007. We get a very different look at performance between the funds. We now have the C fund in black outperforming the S fund. Okay, and the I and F funds are actually negative over that time frame. Okay, so from this perspective, you might conclude that a 100% C fund, or these are pretty close, maybe 50-50 CNS buy and hold strategy might be the best. Okay. So while TSP investors need to have an understanding of long-term performance, right? Many of us focus on shorter-term time durations. This comparison chart starts at the top in 2020, right before the COVID market collapse. Okay, so we're basically looking at a little bit more than a 3-year snapshot. So from this perspective, the C fund has clearly outperformed the other TSP funds, right? We got the C fund up here at over 21%, clearly outperforming the other TSP funds. An important takeaway from this is the S fund performance. The S fund was down 40% at the low, at the bottom from COVID, right? It then rallied to up over 50% at its high in 2021. That's a 90% move in less than 2 years, right? That's a huge move. And we saw people talking about on Facebook how they were making like 100% move on the S fund. And that's great at the time, right? Unfortunately, volatility works in both directions, right? So the S fund is now back down as of October 2023. The S fund is now back down right to its starting point at the top before the COVID collapse. So again, if you want to get the high volatility in the S fund to the upside, you have to be willing to accept the downside volatility if you're if you're using a buy and hold methodology. So if we zoom in further to the January 2022 high, okay, almost a 2-year snapshot in performance, right? We see the C fund still outperforming, okay? C fund still above the other funds, but all 4 TSP funds are significantly negative, okay? The S fund performance is by far the worst, almost 30% down, right? 28.42% down from the it's not down from the S fund's high, but down from the C fund high at the peak in January 2022. So a much different view of performance on a 2-year snapshot versus a 3.5-year snapshot, and on and on. So many TSP investors focus heavily on year-to-date performance. Okay, so this chart shows the relative performance of the TSP funds since the beginning of 2023. Okay, so this is our year-to-date chart. So while the C fund rallied 20% from January 2023 until its high at the end of August, it's fallen back to being positive just 7.67% for the year. Okay. And at this point, year to date, the S, I, and F funds are all now negative for the year. S, I, and F all negative for year to date 2023. So as you can see from the charts that we've already covered, the starting point of the snapshot is what drives the performance number. Okay. So if we roll back the year-to-date chart by just 1 month, so instead of beginning January 1st, 2023, if we roll it back to December 1st, 2022, the performance is significantly different. Okay, so now we're starting at December 1st, 2022. The C fund is now positive still, but only by 1%. Okay. All the other funds are negative, with the S fund down here at negative 7.5% since December 1st, 2022. So the point here is that perspective is everything. Okay. Long, medium, and short-term performance metrics are important, but we have to keep in mind that performance is a rolling number through time. The best performing fund over the long term may not be the best fund to be in when you're close or in retirement, right? Upside volatility is very exciting, but downside volatility can destroy your account balance. All right, the final chart is the relative performance of the Grow Model portfolio from the top in 2022 to September 2023. Okay, 2 important takeaways from this chart. First is the G fund in blue. That's the G fund, the blue line at the top. The G fund has outperformed all of the TSP funds and the Grow Model portfolio since the top in January 2022. Right? It makes sense because all the funds are negative on the chart that we just showed. Since the top in 2022, all the funds are negative. So it makes sense that the G fund, not being able to have a negative quarter by statute, has been increasing in value as interest rates have been going up steadily over the past 3 years. So the G fund has basically been a joke to many TSP investors, for decades. And while it's true that the G fund has severely underperformed the stock funds over the long term, since the beginning of 2022, the G fund has way outperformed. Second is the relatively flat line of the grow model portfolio. So we got the grow model portfolio in green. Our number one rule is don't lose money, right? Our number two rule is you have to be in the stock funds when the market is trending up for your TSP account to grow. Our rule number one limits downside volatility. Okay, it does not protect against short-term drawdowns, but it does protect against larger bear markets that can devastate your account balance. Our rule number two allows us to capture much of the upside volatility when the market's in an uptrend. The model does not capture all upside gains, but that is the trade-off for avoiding catastrophic losses. So TSP is a long-term wealth building vehicle. It is not a day trading platform. The ability to zoom in and zoom out while evaluating performance and volatility relative to your personal circumstances and risk tolerance is a critical skill to build and retain wealth in TSP. We have no control over the market direction, right? The best we can do as TSP investors is to be in the stock funds when the market is trending up and protecting those gains when the market is trending down. Okay, that is all I got. Hopefully, it helps you guys put performance in long-term, medium-term, and short-term perspective, and specifically with respect to where you are in terms of either age or longevity in your career or where you are in retirement, because the how you view performance should be significantly taken into account with respect to where you are in your life. All right, if you guys have questions, please post them in the comments, or you can hit us up at support@growmytsp.com. Have a great day.